Hi guys, I'm Rich. Let's go through my top 5 things to watch for the week ahead in markets. Number 1, RBA rates meeting. The latest RBA meeting this week comes with elevated expectations of a further rate hike on the back of the latest CPI data we saw last week. With Australian CPI beating expectations last month, the RBA might well look to hike rates again in line with their signal last time around that the bank would now be in data-dependent mode for each meeting. Australian dollar impact will then depend on the forward guidance issued and whether the bank leaves the door open to further hikes. Number 2, BOC rates meeting. The BOC meeting should be more of a straightforward affair. With CPI still cooling nicely, the bank is widely expected to keep rates on hold again this week. However, the message given alongside the decision should reiterate a willingness to act if necessary. Now, with that in mind, traders will be keen to hear how the bank addresses the strength of the domestic labour market and the inflationary risks around it. Number 3, UK BRC Retail Sales Monitor. The latest BRC data this week will be closely watched by Great British Pound traders, used as a gauge for the ONS data and also used to get an inkling of how inflation performed. The data will be key for traders looking to get a read on how the BOE is likely to act this month. Any upside strength in the data will likely raise the likelihood of a further hike from the BOE, keeping Great British Pound supported near term. Number 4, OPEC meetings. The latest round of OPEC meetings will be closely watched given that oil prices remain at subdued levels. Following the recent production cut announcement, OPEC Plus signaled that it could cut production further if it felt it necessary, meaning that each meeting is now considered live, given that the previous announcement was a surprise. As such, this meeting will be a key volatility risk for oil traders this week. Number 5, China new loans. China data has been drawing a lot of heat recently given the growing concerns over the health of post-pandemic recovery there. With initial data strength following reopening at the start of the year seeming to have faded, recent negative data has taken a toll on risk appetite. Traders will now be looking at this week's loans data for an insight into liquidity and business activity over the last month, likely to hurt stocks if any worrying weakness is seen. As always, you can click on the link in the description just below to see the full economic calendar with the previous month's data and consensus expectation for this time. But for now, thanks everyone, good luck trading this week, and remember to smash that like button and hit subscribe so you don't miss more content like this when it's released.